Welcome back to Trading Hour on CNBC TV18. Well, you know, the mid-cap index is really flying away right now. It's a 240-point gain that you're seeing on the mid-cap index. And a couple of stocks definitely deserve mention. Clean Science and Technology, that one has been a stock on a tear. It's at 24.20 now. Remember, the issue price of Clean Science was, what, 800 rupees? It listed at a big premium, but from July, from the time it listed to now, from the issue price, the stock is up 200%. So these themes have really worked for the market. Balaji Amines is another one, up 4.5%. Paytm has bounced back, up about 4%. But specialty chemicals as a whole, I noticed, is really picking up pace today. Deepak Nitrite, Balaji Amines, Clean Science, all looking pretty good. But let's do one thing. Let us get a market guest on board to tell us what one should be doing in the markets now. Somnath Mukherjee, the managing partner at ASK Wealth Advisors, joins us on the show now, and he's here with us right in the studio. It's a pleasure to be talking to you, Somnath, especially face to face, you know.
Yeah.
I mean, what, after 2 years, you're getting a chance to sort of speak to people face to face in the studio. So it's a relief.
Yeah.
But this new variant, do you think it's the best buying opportunity for retail investors? Because they haven't got a chance in the last 1.5 years to do any major buying, especially in broader markets.
No, I don't think, you know, timing a specific variant, timing a specific event is ever a great idea. Especially for retail, they're much better off with systematic investment strategies, whether it is related to longer term allocation decisions, whether it is related to a very blind sort of systematic plan that they have. That 10 out of 10 times is better than trying to time an event. We have no idea how this new variant will pan out, whether it is going to remain mild, whether it is going to spawn another round of lockdowns across the world on a rolling basis. It's all something that we will know as we go forward. So never a great idea to try and time it.
Okay, you know, on that point about Clean Science, someone recently told me in India, there have always been some Ds to invest in. It started with demographics, then it moved to digitization, and now the new theme is decarbonization. So follow the 3 Ds when it comes to investing in India. But Somnath, as you know, Sonia said, it's great to see you here in person. Now you invest across asset classes, across market capitalization. How would you rate the relative attractiveness of Indian equities?
See, Indian equities is or has been now for quite some time a fairly all-weather, bellwether asset class or sub-asset class by itself within the broader emerging markets universe. Unlike several of the other emerging markets that are mostly monoline in nature, some of them are very commodities heavy, some of them are tech heavy, India offers a huge diversity of opportunities, so from technology to materials to commodities to financials, and now increasingly on the new age digital businesses as well. So India is an evergreen asset class. So our attraction as a large economy that is growing at a certain baseline level year after year will engender always a very large pool of companies. Some of them will be truly world-class, and we've seen world-class companies from India in the last 20 years. We will see more world-class companies from India in the next 20 years. So the opportunity on Indian equities is not a digital one, that is it there today or is it a good time today. The opportunity, the good news is that the Indian equity opportunity is a fairly evergreen one. And that's a function of demographics and everything else. But clearly, just the laws of probability help us. We are such a large country, 1.3, 1.4 billion people, many of them incredibly smart. And so we will always have a steady pool of companies that are doing very well, both domestically and some of them internationally as well. And that is the real opportunity for India.
All right. Hi, Somnath. Good morning. This is Pavitra. You know, you said huge diversity of opportunity, but the thing is that a lot of this opportunity comes at a very expensive price, right? Valuations are hefty for a lot of pockets in this market. So if someone is to get into the market at this point and they want to invest, what are the sectors that you think look really attractive here?
Tough to, especially if you're talking about a first-time investor. First of all, don't look at sectors at all. If you're a first-time investor, just be as widespread and diversified as one possibly can. There isn't a huge amount of merit in cherry-picking sectors. That is true only for investors who are already well invested and have the experience of investing in the capital markets for a few years, and then you can start optimizing portfolios around sectors and stocks and select areas and themes and so on and so forth. But if you are starting off, don't bother. It's not worth it.
Okay, so what if you have been in this space for a while and now you're looking at, you do see this sector rotation play out, right? So does something look more attractive to you right now?
So in general, one of the key themes that have worked over a very long period of time in India and bellwether in nature is anything that is predicated on domestic consumption. Consumption is more than half of India's GDP. Consumption also is the biggest driver as India's per capita income grows as it invariably has to, from $2,000 to $4,000, $5,000, $6,000 in the next few years and decades. Consumption will be one theme that will remain a very attractive theme for a range of companies. We see that on the listed side over the last 20 years. We also see that in the new age digital companies, where if you see some of the new listings, some of the private side transactions of companies on the digital side, the most sought after, the most valued companies are the ones that are addressing the digital, the consumer opportunity in India. That will remain a very, very interesting, attractive opportunity, irrespective of what level of valuations that you're looking at right now.
In the digital space, particularly.
Not just, see, digital is a new development. I'm talking about companies that address the consumption theme in India. Overall.
Okay. Since we spoke digital, and Reema was talking about the D's, the other one, decarbonization, I wanted your thoughts on names like Clean Science, because these are players that are emerging as global leaders in most of their product categories. I mean, Clean Science, just take a case in point there. And now they're doing a lot. I mean, there's backward integration, there's a higher wallet share that many of these companies are seeing. You think it's still not too late to get into names like this?
While I can't comment specifically on stocks, but on the general theme of clean energy, decarbonization, India will obviously have to lead the way. And the Prime Minister was recently there at COP. India made fairly ambitious commitments out there. And that's something that has been the focus of the government for now quite a few years. And India has an opportunity of sort of leading the way on this, given our size and given our sheer demand for energy. So if we have to replace even small slivers of that away from fossil fuels like coal or anything else, the opportunity on the clean tech, clean energy side will be immense. So absolutely, there will be a range of companies that work in this area, whether it is on the electric vehicle side, whether it is clean energy side, whether it's in the storage side, and they will keep giving rise to serious amounts of opportunities. And the other thing that happens is that because of India's scale, some of these companies would be able to scale up to global sized capacities and then be able to also address the global markets in this.
Somnath, thank you very much for joining us. Good conversation. Look forward to chatting soon with you. Need to slip into a very short break on that note. When we return,